Makes it interesting.
All right, we're here today. We're going to be talking in a second. We're going to go on the air as we go. It's Money Matters with Greg here. So it's May 21st, and we're fortunate to have Jonathan Hildebrand talk about SBAs today. So we're very, very excited to be able to have this going. And I want to thank Greg Kovac again for being the engineer, and here we go. So.
To determine which investments may be appropriate for you, consult with your attorney, accountant, and financial advisor or tax advisor prior to investing.
Got to include the disclaimer, right? All right, good morning. It's May 21st here at WVLP 103.1. The show's Money Matters with Greg. I'm Greg Farrell, CEO and president of Farrell Wealth. It's a wealth management firm that is local here at Valpo, and I'm a registered financial advisor, and we talk money on this show. So Money Matters with Greg, anything about money. And we were lucky enough to have a guest here today talking about small business loans for you and your business, and what they are, how do you get one, and kind of go through the muck of what exactly it is to get a small business loan. I want to remind everybody, you can find us on Twitter at Farrell Wealth. You can find us on Facebook as well with Money Matters with Greg and at Farrell Wealth. But then also anything you need from us, just email us. Just email me at greg@farrellwealth.com. Happy to respond to any emails, and would always love hearing from everyone. We are broadcast live at wvlp.org. We're also broadcast live in streaming at farrellwealth.com. And we have a number of streamers. We were very excited. A couple shows ago, we actually broke the stream, and that means we have easily a couple thousand people listening in, which is great. So that is obviously worldwide. You can also find us on iTunes, and with Money Matters with Greg, we have almost 100 episodes up. We're anxious to get to that 100 number, and looking forward to adding this one to Money Matters with Greg on iTunes or anywhere else you find your podcast. Please listen in, and hopefully we'll add some value to you, your day, your family's life, and maybe get you to grow, create your money, protect, preserve your money, distribute your money in life, and distribute your money after death. And those are really the four quadrants of wealth management we always talk about here on this show. And so maybe you might own a business, maybe you might be doing some great things as far as what is the backbone of this wonderful country that we live in. And maybe you might want to talk to somebody about some business funding that would actually help you grow your business in another different way. So maybe you might want to be talking to Jonathan Hildebrand, who's Vice President of Small Business at Centier Bank. That's a local bank here. He's going to tell you a little bit about it. And we're going to walk through, in the next 25 minutes or so, what is an SBA? What does it stand for? What is the Small Business Administration? And how does this look? What is an SBA? How does it go about? We're going to ask him lots of questions. And he's going to answer any of your questions. If you want to contact us at 209-476-9000, you can certainly call in as well. But with no further ado, Vice President of Small Business at Centier Bank, Jonathan Hildebrand. Hello.
Hello. Thank you for having me on the show today, Greg.
All right. Thanks. Thanks for being here. Really appreciate it. Glad we were able to. We had a makeup day. We had to push some stuff back. There were technical glitches here at the studio. At one point, we had to move Jonathan around, but we're certainly excited to have him today and talk SBA. All right. So really easy, casual, conversation. Just trying to fill you in. We'll try to walk you through as listeners. Where we intend to go with this, but really, first thing is, let's just go with basic. I've never heard of an SBA. What is an SBA?
Sure. So the SBA is one of many lending products that banks offer. It is a government guaranteed loan program, not unlike an FHA loan or a student loan that would be government guaranteed. And so it's originated by a bank and then provided to small and medium-sized businesses throughout the United States. It was literally formed by an act of Congress in 1953, the Small Business Administration was, and it's part of our federal government.
Okay, so it was established by the federal government. Why would they do such a thing? Like, why would the government feel responsible for the need or whatever it might be to do this in 1953?
Right, that's a good question. So just after the war, I think the U.S. government wanted to see small businesses grow. Small businesses are the backbone of the U.S. economy and are responsible for over 60% of jobs that are created throughout the United States. And so I can't remember the exact number, but it's somewhere around 60 to 70%. And so I think even back in the 50s, Congress saw a need for banks to want to do financing, and they weren't financing small businesses as much as they wanted, and so they gave them a loan program that provided the opportunity for borrowers to borrow money from banks with the help of the federal government.
Perfect. So that's the definition of an SBA, exactly kind of what it is. But tell me, if I own a dry cleaning service in a strip mall, dry cleaning business in a strip mall, I know I'm a small business, right? But maybe I don't necessarily qualify, or what am I? So what is the definition of a small business in the SBA's world?
Sure. So the SBA generally defines small business three different ways, and it's up to the lender to kind of work through that. It's really based on the industry code for the actual company, so your dry cleaner in particular. We look it up and see, and there are three different ways that we can look at that. It's based on revenue. It's also could be based on how many employees you have, and then we may look at the net worth of the company as well to define what a small business is. But just to give you an idea, manufacturers, some can go as high as $35 million in revenue and still be considered a small business by SBA size standards. Some can have up to 1,500 employees and still be considered small businesses. So they're a lot larger than you would think than just maybe a corner dry cleaner. You could be a dry cleaner with 20 locations and still qualify, Greg.
Okay. Well, I don't intend to go into the dry cleaning business anytime soon. I'll stick with my day job. But I can totally get it. If someone out there has a business that is either like that, or a franchisee, or you name it, with being able to get funding. And we all know funding really matters. I mean, you really have to be able to make payroll. You have to be able to make the growth. You might be hiring a new employee. All of these different things really, really matter that will ultimately grow your business. Real quick question off the side here. Some of the codes that you mentioned, the codes and the businesses, are there businesses that are preferred by the SBA versus other businesses? Or are there businesses that maybe an SBA they'd sort of walk away from, because it's too risky, or whatever it might be? There might be an industry, or let's for instance say that somebody might be into let's say buying and selling real estate, and you're worried about the real estate market falling apart, that sort of thing. Is there some sort of industry that's more favorable than the other?
Absolutely. So generally speaking, they want the SBA, they want us to lend to small businesses or their small business enterprises. Now, what a lot of people do when they go buy a piece of real estate to run their business out of, your dry cleaning location, for example, if we're going to follow that one through, we could fund that real estate, but they generally don't want to be involved in speculative real estate, what we'll call in the industry non-owner occupied real estate, a strip center, for example, or even a rental house. They generally don't want to be involved in financing that type of business because those businesses are considered to be a little bit more speculative in nature, and the SBA wants to work with owner-occupant borrowers. There are two caveats to that are pretty large. One's hotels. The hotel industry is heavily financed by SBA with different programs that they offer. And then the other one that is pretty heavily used would be for self-storage, any mini storage.
So if you own a storage facility, or you're looking to get into the storage facility, SBA might be right up your alley because that's what they like to do.
Absolutely.
So how about restaurants? If I'm a restaurateur, that would probably be more risky?
They generally tend to be a little riskier, and the SBA has a large concentration of restaurants as a result of that. So the first step really is that the bank would look at it and say, do we see any potential risk in this deal, and can that risk be potentially mitigated by the SBA?
Oh, I see. So all right, so then we're going to get into the nuts on that, because you mentioned federal government, you mentioned SBA, and I know this was started by the federal government, but the money, let's just explain it to everybody, the money doesn't come from the federal government.
Right, absolutely. So the money comes from the bank, and in general, in most programs, it comes from the bank or from investors in some programs, and is provided to the small business borrower as a result of that. Now, the SBA, in the form of, the United States government in the form of the SBA, comes in and provides a guarantee. So if the business owner is unable to make the payments because business turns out poorly or there's poor cash flow and the bank needs to liquidate collateral, the SBA is there to help the bank become whole. They don't certainly make up all of our, we still have a loss, but they're loss sharers with with the bank.
So just to back up for everybody out there listening, just want to make sure we're talking SBA loans here with Jonathan Hildebrand, Vice President of Small Business at Centier Bank. It's a regional bank here, a local bank here in northwestern Indiana, and is an expert in the SBA world. So that's why we're bringing you this small business loan type opportunity education for you. This is a federal government program. It's not federal dollars. So when you say they, you keep on saying they lend, they lend. They is really the local banks that are probably that are approved, right, through the SBA.
Correct.
Is that right? Okay.
Yes. So
and who would they be? Like, let's say in this area, obviously Centier.
Right. Many local community and larger national banks do SBA lending, and so most banks that you would approach have an SBA program of one sort or another. I think some of the ones that are more prevalent in the area, aside from Centier Bank, might be First Source Bank that does some SBA lending. We've seen some from People's Bank, and then Huntington statewide does a lot.
Okay.
They're sort of SBA specialists as well.
So then, so the Chases of the world, the Fifth Thirds, do they do this too?
They certainly do SBA lending.
Okay.
On a proportional basis, they do fewer loans than we do as a community bank in the state of Indiana.
I see. Okay. And then what? So maybe a credit union even? Do credit unions give out? So
Absolutely.
I'm just thinking with
So
all the
some
farm
credit unions
world that we
do.
have out here. So some credit unions do.
Absolutely.
So a teachers credit union that's local here, do they probably have an SBA? I would assume.
They do some SBA lending. I'm not sure that they do a lot.
A lot. Okay. All right. Cool. It's just a matter of helping you guys out there know where to go. Like, you can go to your local banker and ask about an SBA. It's not like you have to go to the federal government administration. There is no such thing. You can go to their website, obviously, and go to I guess it would be, well, we'll figure out the website in a second. I want to be able to make sure we get the right one. But you can, if you have a banking relationship, if you have a bank, you can at least go to them and at least have a conversation.
Correct.
Okay, cool. So more on the SBA side, can you, if you can bring up some of the other things that you wanted to be able to talk about as far as SBA and how they basically help a small business in the financing?
Sure, absolutely. Well, if we take a big step back, I think one of the big things I just wanted to mention is that SBA really is for a business at any time in its life cycle as it needs cash. It's oftentimes used when conventional financing might not meet the needs of a client. That might be one of the earliest times in a business's life cycle is at the startup time. When a business starts up, that is a time when most often the SBA may be used to help guarantee a loan. Other instances might be when collateral is less than the bank would like to see, and so we may be collaterally short and may need the SBA to step in with a government loan guarantee to help make us more comfortable in doing the loan. Also, SBA loan programs offer less money down than conventional financing options do, and so if you were purchasing a piece of real estate for your dry cleaning business, again, Greg, I think we may ask for between 75 and 80% down on a conventional financing, and we may ask for as little as 10% down if we use an SBA program. Also, there are sometimes reasons that you may need or want to borrow the money longer than a bank is willing to lend it for. Some real estate transactions, and you talked about self-storage, oftentimes we'll go up to 15 years on a self-storage deal because they, not always, but can be a little riskier. They can be a little lower quality build as a placeholder for other real estate investments later on down the road. And so we may go up to only 15 years on something like that to shorten the amortization and lower the risk to the bank. If you as a self-storage investor needed a little bit longer time, 20, 25 years, we may use an SBA program to help us with that at Centier. And then there are some higher risk industries, and you mentioned two of them already. One was restaurants and the other, frankly, is dry cleaning that we may not want to do without the help of the SBA. There are also some others, other personal service type industries, nail salons, hair salons that may have some higher risk, and really the risk to the bank is they have a higher failure rate, like you see with restaurants as well, than the average other businesses may. And so it's not that your particular hair salon would be less risky, but it's that in general that industry is a little riskier, and we may ask for an SBA guarantee on a loan in certain industries.
So basically, it can add as a safety net for the bank in a way, right?
It adds as a safety net for the bank. It allows us to do deals that we may not otherwise do in our policies. Correct.
So obviously there's more process than what would be a loan with the bank, and then you say, look, we're not comfortable with this, we need you to do SBA, and then there's more work to be done. But it's nice to be able to have that work over like for instance, instead of 15 years, you go 20 or 25. Then you as an owner of that facility or whatever it might be, get a better term or, more comfortable term.
Yeah, absolutely. So there are 2 loan programs that the SBA offers. One is the SBA 7A program, which is sort of that flagship program that everyone is more or less familiar with. That's the one where the bank does the whole loan and gets the government guarantee on top of it. There is another one that's very popular, not only in this area, but nationwide, and that's called the SBA 504 program. 504 is set up to help fund heavy equipment or real estate transactions, and we'll use that 504 program with lots of different types of borrowers. We've worked if a physician wanted a new property to operate out of, but they wanted to put as little as 10% down. We've worked with them. The 504 program is different because the bank does all the initial financing, but at the end of a short period of time, usually it's after construction, and once it's finalized, if there was construction, the bank will finance 50%. So if it's a $100,000 deal, for example, the bank would keep $50,000 on the books and would work with a community development corporation, a CDC. Our local CDC is the regional development company in in Valparaiso. And we work with them directly and pretty closely to help. And what they'll do is take that $40,000 loan in my example and bundle it with all the other, they call them debentures, all the other 504 debentures that are done that month, and sell them on the secondary market to investors. And those investors will invest in these government guaranteed loans, SBA loans, and usually it's either a 10 or a 20-year debenture. The 10 years are every other month, the 20 years every month.
Perfect.
And now they go up to 25. So
that's great. It's great information too. That's certainly, I forgot about the CDC. You sort of forget about all this stuff, and that's why he's here. Jonathan Hildebrand is Vice President of Small Business at Centier Bank, and we're talking SBAs out there for you small business owners that might be interested in expanding. Certainly with the economy the way it is now and the way things are going in regards to the markets, which we've been talking on the show for like the last 4 weeks. We have, and we're up 350 points today, by the way. I don't know if you necessarily knew that, but the market's doing great, and the earnings were fantastic. We've been really sort of stressing that in the last 4 weeks. We sort of divested here and talking about SBA with Jonathan. So Jonathan's part of Centier Bank. You can find them. He can tell you about the website in a second, but tell us a little bit about Centier if you can.
Sure. So Centier is a community bank. We were founded in 1895 as the first bank of Whiting. In 1991, we changed our name to Centier, which really, frankly, was a made-up name, but was a little easier to market and had some significance to us at the time, as it was our century. It was about a century of existence for Centier, and that's part of the name. We are a little shy of $4 billion in assets, which makes us a large community bank, but we're still dedicated to a lot of our customers throughout northern and central Indiana. We have offices throughout northwest Indiana in several locations, and then we're also in the South Bend, Mishawaka, Elkhart area, Fort Wayne area. We have 5 offices in Lafayette, greater Lafayette, and then we also have a footprint that we're building out in Indianapolis and the greater Indianapolis area.
And correct me if I'm wrong, but it's family owned.
It is family owned. It's been 4 generations of the Schrag family that's owned Centier Bank, and they have a commitment to being not for sale, which is unique in the community banking space.
Yeah, and they're great people, by the way. So they're a really good family. So just shout out to the Schrags there for being awesome. They're really great people and great contributors to our community here locally, with a number of different programs that the bank certainly helps with locally here for nonprofits. They're very active. So we appreciate all that they do in regards to their business model, which is really family first. So talking about the loans and the terms and everything else, as far as circling back here in the last 10 minutes of the show in regards to SBAs. All right, so we talked about small business, being able to think about an SBA loan, what it might need in regards to an SBA loan. Now, how does one qualify, or what would be required for one to qualify for an SBA loan?
There are a lot of things that will help us make sure a client's qualified for an SBA loan. We generally try to collect a lot of information from them, but there are two key pieces of items that we look at in general once we've collected some information. The first really is, does it cash flow? Can the business afford the new debt? That seems like a simple question, but oftentimes we'll have to look at projections or historical information to make that determination. So does it cash flow? And then the second is do we have sufficient collateral? SBA does have us work, depending on the size of the deal, on looking to make sure that we're sufficiently covered. And so it's not unusual for us to take collateral that may not be related directly to the loan to make sure that we're well collateralized to support the borrowing that the client has.
All right, and then so let's talk about requirements as well. How old does the business need to be?
We can finance any type of business with an SBA loan. In fact, we do look at startup loans quite frequently and do several of them. We've helped businesses start in the community. But generally speaking, if you're an existing business, we look for 3 years of business and personal tax returns. And then we ask for a personal financial statement, which is a list of an investor's assets and liabilities, the business owners. And we generally ask the business owners to guarantee the loan. And the way I kind of like to think of that either is as a co-signer for a loan, or we'll ask them, if the business were unable to make the payments, we'd ask them to step up and make the payments if they're able to. And if not, they generally have supported it in other ways as well through additional collateral.
So if I'm a business owner, am I going to have to come up with a personal loan, a personal collateral agreement on this? I mean,
we may,
because that's what. That's what most businesses don't want to do, right?
Right.
So it's just up to each individual bank.
SBA has
level, right?
SBA has some governing limits. So in our example, if you were buying real estate, we could generally do that as little as 10% down, and we may not take anything other than business assets to secure that. If you were looking for money to expand your dry cleaning business and you wanted to buy some trucks but also hire some employees and cover some of your overhead while the growth is happening, we might consider that to be more of a working capital loan. And there's really no, other than the truck that I've mentioned, there's really no collateral that supports that. We may, depending on the size of the loan and your request, we may be required by the SBA to look for personally owned real estate as part of that collateral pool.
Now, just a quick question that I forgot to ask earlier. And by the way, we're sitting here with Jonathan Hildebrand, Vice President of Small Business, Centier Bank. The show's Money Matters with Greg. I'm Greg Farrell, CEO and President of Farrell Wealth. And the show's about money, so that's why we're talking about SBAs here, trying to give as much information as possible. The 504 program, real quick, that was basically for machinery and types of, if I need a forklift or I need